Hello everyone. Welcome back to Prime Accounting Classroom, where we make accounting simple, practical, and easy to understand. In today's lesson, we're going to break down an important concept used in almost every business: the petty cash system. If you've ever wondered how businesses handle small daily expenses like transport, office snacks, or minor repairs, then this video is exactly what you need. Let's dive right in. 1. What is petty cash? Petty cash refers to a small amount of money kept on hand by a business to pay for minor, everyday expenses. Instead of writing a check or processing bank payments for every small cost, businesses use petty cash for convenience. Example: imagine a company needs to buy office stationery worth $25 or pay for delivery transport of $15. It would be inefficient to go through the bank for such small payments, so petty cash is used instead. 2. What is the petty cash system? The petty cash system is a method used to manage and control these small cash payments. The most commonly used system is called the Imprest system. 3. The Imprest system explained. Under the Imprest system, a fixed amount of money is set aside as petty cash. This amount remains constant. Whenever money is spent, records are kept. At the end of a period, the exact amount spent is replenished. Example: let's say a business sets up petty cash with $200. During the week, the following expenses occur: transport, $40, office supplies, $35, refreshments, $25. Total spent equals $100. At the end of the week, the business will reimburse exactly $100 to bring the petty cash balance back to $200. 4. Key features of the petty cash system. Fixed float amount, let's say $200, used for small expenses only. Regular replenishment. Proper documentation required. Managed by a petty cash custodian. 5. Petty cash book. All petty cash transactions are recorded in a petty cash book. This book includes date, description of expense voucher number, amount spent. Each payment is supported by a petty cash voucher. This acts as evidence that the money was used properly. 6. Journal entries. Let's look at how this works in accounting records. 1. Establishing petty cash. When petty cash is created: debit, petty cash $200. Credit, cash, bank, $200. 2. During the period. No journal entry is made for each small expense under the Imprest system. They are recorded in the petty cash book instead. 3. Replenishment. At the end of the period, if expenses were transport $40, supplies $35, refreshments $25, then the journal entry is debit, transport expense $40, debit, office supplies expense $35, debit, refreshments expense $25, credit, cash/bank $100. 7. Advantages of the petty cash system. Its advantages include: 1. Saves time and effort. 2. Reduces workload on the main cash system. 3. Improves control over small expenses. 4. Helps track minor expenditures clearly. 5. Prevents misuse of funds when properly managed. 8. Internal controls for petty cash. To prevent fraud or errors, businesses must assign one responsible person, custodian, require vouchers for every expense, perform regular checks and audits, keep the cash secure, reconcile balances frequently. 9. Real-life application. In real businesses, petty cash is used for transportation fares, minor office repairs, staff refreshments, emergency small purchases. It keeps operations running smoothly without unnecessary delays. Conclusion. So to summarize, the petty cash system is a simple but powerful way to manage small business expenses efficiently. And with the Imprest system, businesses maintain control, accuracy, and accountability at all times. If you found this video helpful, don't forget to like the video, subscribe to Prime Accounting Classroom, and turn on notification for more accounting lessons. See you in the next class.